Yes. Today we are going to have, and this is with respect to ACCA, is strategic business reporting. Okay. Strategic business reporting. This is the lecture 2. Okay. This is the lecture 2 with chapter 2 with respect to the basic concepts. See, in the examination, they will ask you somewhere around to 3 to 5 marks. Okay, minimum, at least we can say, they will ask you for minimum 3 marks. Is that ethical aspects? How the ethical, professional and ethical duty of accountant. It is not only in this exam paper, in every paper, we are going to have question on ethics. Okay, question on ethics. Now what we are going to do, if we have done F8 audit and assurance, if you have done F6 taxation, is it basically in those areas, and FR financial reporting to some extent. What it says, they're talking about the ethics, how we have to, it's a very simple one. Okay, it's a very simple way of understanding, very small chapter. I discuss the ethical and professional issues in advising whenever you are a financial or chief financial officer or something like heading the finance department, how you have to advise with respect to corporate reporting, and what is the relevance, and most importantly what is the importance of ethical and professional issues. See what happens when we are going to prepare the financial statements. There will be a concept of creative accounting. See, when we are talking about the financial statements, is that very important. See, when in the financial statement, when in the last lecture, what we have done, we are talking in terms of qualitative factors. Is that qualitative factors? When we talk about qualitative factors, we are very much concerned about what? We are concerned about comparison. See, comparison, consistency, reliability, relevance, timely, understandably, most importantly, it has to be true and fair. Because as an auditor, the moment you are as ACCA, what you do, you are supposed to sign the financial statements of the companies. When you have to sign the financial statements, what we will do, we will never say that it is complete. Okay, we will never say that it is complete. Always we say it is true and fair. Is it when you say so? Because when you are talking about, see, it is whether it is an external audit or internal audit, especially with respect to external audit. External audit is specifically based on what? It is based on the sampling. We are not going to do all the each and every voucher. We are not going to do it. We are doing, whether we take IT audit also, information systems audit also, we are doing audit through the IT. It is also we are doing with respect to the sampling only. That is the reason when we talk about the professional and ethical aspects, we have to be very careful, because it is the responsibility. The biggest of the biggest scams happen. It's because of the involvement of the auditors. Is it? If they, I'm not taking the names of the companies, but you can have a broader perspective. The companies, directly or indirectly, it is the auditor's responsibility how they are going to be accountable to the financial reporting. Fine. That is the reason always we make sure that it is going to be a true and fair. Nobody in the world will say it is going to be complete. Now in that context, we will talk about what is the relevance and importance of ethical stand. Appraise the potential ethical importance of professional and managerial decision. We have to make sure that what are the responsibilities, is that what are the implications, what are its consequences if something goes wrong. Because see, what we are talking in terms of what we are taking in terms of stakeholders. And stakeholders is plays a very significant role. Either they are having multiple stakeholders. Is it right? All the stakeholders will view the financial statements in a different context. Okay, and the last one is consequences of not upholding the ethical principles with respect to what? With respect to preparation of corporate reports. You understand this, that this is the first one. If you have a complete understanding about these things, automatically what will happen? We will have a very easy walk through with respect to the concept as such. Is it? Are you clear about this?
Yes, sir.
Fine. Now, coming back to this, what we are doing, we are talking about code of ethics. Have you have any idea about code of ethics?
No, sir.
In auditing, we have done. Okay. See, you got the exemption for auditing, but when you take the audit and assurance, is it right? F8, audit and assurance. Audit and assurance basically talks about ethical aspects. Apart from all the internal audit, external audit, statutory audit, corporate governance issues, one of the chapters is related to what? It related to ethics. In ethics, we are talking in terms of code of conduct and consequences of, and these are the two things which you have to be very clear, very short and very specific. When you are talking about the things, see what are the approaches? There are two approaches. One is based on the rules, the second is based on the principles. They are very quite different, okay? Quite different as such. What are the rules? See, national accounting standards are primarily, see, when we are preparing a financial statements, is that when we are preparing the financial statements, is that financial statements are prepared as per the, first they will say it is the national law, okay, national company law, commercial company law or national company, whichever country it is related. Then they will come with respect to international law. First you have to comply with the national law. You are starting your own business. First you have to comply with the national rules and regulations. The second one we are talking in terms of international rules and regulations. That is the reason when we are talking in terms of this, national standards are primarily, it is called as a rule base. This much you should keep it in mind. That's more than enough. Is that, in other words, they provide extensive guidance of accounting, of particular transactions, all those things. Is that, whereas in the second aspect, IFRS, see now you are seeing the IFRS standards are often based on what? It is based on the principles. It talks of, see, national law is a broader framework, is it? IFRS talk about specifically with respect to what? It specifically talks about the financial reporting. National laws is applicable to all companies, is it right? All companies, profit based companies, you will have one. Non-profit based companies, you have one, is it right? You have like that. You all one law will be there, irrespective of what. But when we are talking about the principles, it is talking in terms of IFRS, financial reporting principles. See what they will say, albeit with some detailed rules and in place to eliminate what? This is where we are talking. There should not be any uncertainty. And what is the purpose when you are doing the things? Is that when we are making a concept, we have talking in terms of what? In terms of comparability. This is the, now you see the thing, any financial statement will not be for 1 year. They will say it is for 2022 and they will say it is for 2021. That's the basic thing. Means they are not giving financial statements only for 1 year. always they give financial statements for 2 years. The annual report which is published by any firm is they will put it in the local national language, plus they will put, and languages will be there. They will do it in the English language and they will do it in a national language. Okay, means that is what. Now, principle based approaches to accounting create ethical challenges because of the judgment. See, the entire concept is based on your professional judgment. Yeah, professional judgment, that's what you are what you think at that particular situation, as it right. See, somebody is, somebody cannot impose on it. Is it that external parties, international? But what happens? That is one of the criteria. Is that is one of the reasons. Otherwise, what will happen? Definitely the multinationals. Is it right? MNCs, multinational companies cannot explore or cannot explore their market outside the countries. Okay, that is one of the reasons when we are talking in terms of the international financial reporting system. What they say, there is a ACCA code of conduct. Here we are not going to cover that much in detail, but in audit and assurance, it is one of the core concept which it is going to be tested. Fine? Are you clear about this?
Yes, sir.
Now, any doubts are there? Just you ask me. Okay? Now we are saying, see, just I am giving you a very, very brief overview because we need it, but actually I told you 3 to 4 marks. Minimum 2 marks will be there. That's very, very simple. Minimum 2 marks will be covered on this topic. They are talking about the integrity. There are 5 are there. Is there? If you take code of ethics, it is 5. Now it is 5. Okay, there are 5 code of ethics are there. Integrity, you have to be honest, straightforward. You have to be objective. You should not have any bias. I'm just underlining the keywords. Okay, you have the professional competence. You should have that capability. Is that you should have that qualification. That's very important. You should have a professional knowledge and skills. Otherwise, we are not going to supposed to get ourselves involved. And most importantly, you have to keep confidentiality of the firm information, what you are doing, and you have to follow the laws and regulations. Yeah, you have to follow the rules and regulations as such. Okay. Now they are talking about now integrity. See the thing. These are all the theoretical concept which is going to have impact on your calculation. Is that you should have there are times accountant have incentives to misrepresent. Now I told you in the beginning, you have a creative accounting. See what happens. You take any one method, okay? You take the method of depreciation. Very simple. You take only the method of depreciation. Is that when you are talking about the depreciation, it relates to IAS 16, okay? It is a property, plant and equipment in terms of valuation, okay? Now what happens, you will have a straight line method and you will have a return down value method. You take the things, is that you calculate and see how it will have impact on the profits, okay? If you take the value of the asset is going to be 10,000, okay? Value of the asset will be 10,000. Now if you will say that this year, this asset will be going to be for how many years? This asset is going to be for 5 years. Straight line method, every year what will happen? 10,000 divided by 5, every year how much? 2,000 will be there. This is the first year, this is the depreciation for the second year, this is the depreciation for the third year, so on and so forth. Is that this is for the year 1, is that this is for the year 2, this is for the year 3. Yeah? Now you will find the thing. Now subsequently we are doing for year 4 and year 5. If you take return on value method, they will definitely say that the depreciation is going to be how much? 20%. See the difference is that change of method will change the profits. Okay, change of method will change the profit. If you take 10,000, is that first year it will be 2,000. Fine. Next year. Second year it is 8,000. At the rate of 20%, it comes to how much? 1,600. Okay. You will take 6,400. Again at the rate of 20%. Is that how much you will get? Keep calculator with you.
What? 1 to 80.
1 to 80.
Eight.
Okay, 1 to 80. Next, see the things. How it will affect the expenses are decreasing, the profits will increase. Is that if this is one of the possibilities? Is that if profits to be increased or losses to be increased? Okay, losses to be increased. What will happen if profits to be increased? What will happen? We follow return down value method, because in return down value method the depreciation expenses are decreasing. The expenses will decrease as the profitability will increase. Is that if you want to increase the, say, if you want to show the losses, is it right? You want to show the losses, definitely what you will say? You will say that yes, it is a straight line method. See, this is the basic reason why we are talking. See, an accountant might be motivated to maximize the profit in the current period in order to achieve bonus. Alternatively, if the current period targets are not met, accountant is motivated to shift profits to the next reporting period. Get my point? See, that is the reason. Everything you have to relate with the numbers. When you relate to the numbers, then you will say that yes. What will happen if you see if accountant wants to say that yes, we have to inflate the profits. When you want to inflate the profits, definitely you will shift the method. That is the reason when you are talking about the thing. This is all purely assumptions with respect to selection of depreciation method. Okay, selection of depreciation method. Now what happens? They make it very clearly. There should be consistency. When there is a consistency, definitely there will be a comparison. 1 year you are talking in terms of return down value method, another year we are talking in terms of straight line method, another year we are talking about sum of year digit number method. Okay, so another year we are talking about double declining method. See, you have so many methods are there, but change of method should be very, very specific. This also covers in IAS 1 accounting policies, present financial statement policies and presentation. Is it right? This is that is the reason you always should understand the concept relating to the accounting and financial reporting standard. Now, financing is more likely to be given a loan if it has value of assets, where the loan can be secured. What will happen? The accountant can overstate assets on the financial position. Yeah. Now what happens? That means where we are talking, when we are talking about the financing, we are talking in terms of leverage. Is that we are talking in terms of leverage? Debt divided by debt plus equity, or debt divided by equity. First you have to give preference to this one. Yeah, see, when you have the things, there is an incentive. Is it right? You are having, see, people, managers will go for debt because debt is less expensive. Is that debt is less expensive, but debt is less risky. If you go for equity is high risky and it is very expensive. More the profits, more the dividends. Less the profits, less the dividends. Whereas in the terms of debt, it is not like that. We have to pay a fixed rate of interest. And why debt is more economical is you have profit before interest and tax. First and foremost, we will deduct interest, then we will have profit before tax, then we will pay tax, then we will have profit after tax. You tomorrow you are doing the business also. What you will do, you will not see. You want to expand, you want to explore, is right? You want to diversify. Definitely, if there is a possibility, you will go for a external financing. Now, what happens another way, integrity, is that you have to be, there is a incentives, is that now, if a manager wants that, he want to show that the company performance is really exceptionally good, definitely, see the things, how we'll have. First, you will have a sole trader, okay? First, you will have a sole trader, then from sole trader, you will go for a partnership. Right? Then from a partnership, you will go for a limited liability company. Then from limited liability company, you will go for public limited company, PLC. See, is it now? See, definitely, it is a prestige issue. It is a status symbol that the shares of our companies have been listed and traded in the stock exchange. That is why we say that is also one of the means you have an incentive. A company is being listed on the stock exchange, want to maximize the amount that it is received from the investments. Automatically, what will happen? The market value of the share will increase, and definitely it will be a incentive for the account. Is it? See, that is the reason when you are talking in terms, when you are taking terms of integrity. Integrity says that you have to be straightforward and honest. You have the professional competence and due care. See, you should be qualified, that then only you can work it out. It is very specific. New accounting standards are frequently issued and older standards are often been updated. That is the reason. This is why the technical articles play a very important role. Why they are stressing on technical articles? They are stressing on technical articles only to know that, see, they will give a very minimum weightage, but the weightage is very significant. People will not see if by suppose I think we are not covering technical articles. We can attempt the examination. There is no doubt on that. Okay, there is nothing like that. But if you go through the technical articles, you will have the additional advantage of 5 to 10 marks. You will have that. Means you can have a clear presentation and clear. What they say, they are talking. See the thing. Say it was reading technical articles. You are attending seminars and you are attending the training courses. Any idea about insider trading? We are talking about the conceptual framework. What we have done in the previous case. Any idea about insider trading?
No, sir.
Insider trading is illegal. It's what happens. It talks about see the rule says that as an accountant you know the things what will happen. Is it that you will have the information with respect to how the information, is it that how the financial information, will have impact, okay, will have impact on stock prices. How the see you are today, right now you are today, okay, tomorrow there is some positive information, is it right? Some positive information is there. Today's stock prices is assumed it is going to be £5, okay, the stock prices is £5. Because of positive information, what will happen? The value of the stock tomorrow, it will go up to how much? It will increase because of, but it has not been released, okay? The information will be released tomorrow, is it? And the information will be released through stock exchanges only. Keep it in mind. The firm cannot issue information directly. They have to issue through the stock exchange websites only. The moment the information is released, the value of the stock will go up to how much? It will go up to £6. as an accountant, as a finance manager, you know the information. The information may be positive, the information will be negative. If the information is negative, the value of the stock will decrease. If the information is now you should not buy. See what will do? People will do very simple. Some people will do is that they will buy they buy the stock at the rate of 5, and tomorrow they will sell the stock at the rate of 6. Now there is a negative information. What they will do? They will sell the stock at 5. Okay, because if they hold the stock till tomorrow, what will happen? The value of the stock will decrease. A person who is doing involved in this type of activity called as they are doing insider trading. It is a illegal practice of trading. Are you clear about this?
Yes, sir.
Okay. It is the exchange in one's own advantage, having access to confidential information. See, once I'm explaining this again, when you are doing, when I'm giving you complete information, to the extent that the moment we start doing the answers, you should be sure that what we have discussed, because these points will be covered directly or indirectly in our calculations. An example might be finance director. See, the finance director sell the shares that the company prior to publication of financial results, and was that the market expectation. Means now you understand this concept, is right? You have this concept in front of you. Understand the concept, you will come across what is the concept of insider trade. Means we should not, in some legislations in this area vary. Some in countries, in America, key employees and directors who trade the shares must report to the means if you are key persons, as simple as that. I will you directors and above, is it right? They are, in some countries there is a rule that you should not sell more than 3% of the shares in one day. Some countries say it is going to be, should not be 5%. Is that in some countries they say that yes, otherwise what will happen? Just imagine, either your stock market will go up or the stock market will go down. If you start selling spontaneously, the stock market will go down. If you are purchasing, the stock market will immediately we will come across the reasons. Is there any extra additional information because of this? There is a fluctuations in the stock market or not? That concept is called as a insider trading. Okay. Now we are coming slowly to the thing. See, these areas they will ask. These will be there somewhere for 2 marks. In even some case they will give you for 1 mark. Okay, 2 marks. About the various different aspects. We are talking about the digital technologies. Is that we have to keep update about the things with respect to contemporary challenges. You should have professional competence. You should have adequate knowledge, and more importantly, you have to take care of what? Confidentiality. Okay. Even I am skipping it. You should not skip. You read it. Okay, that's very important. Nowadays, people are very much concerned about what? Artificial intelligence. Is that people are very concerned about artificial intelligence. They can extract data. See what happens. The accounting is making use of. For example, they can extract data from PDFs, spreadsheets, any popular report. They identify anomalies. Any idea about anomalies?
No, sir.
See, anomalies is, it happens once. That's all. COVID is an anomaly. Understand point? COVID-19 is an anomaly. It happens. That's all. It will not happen every time. But if it happens, it will have a huge impact. Okay? It will have a huge impact, which may detect or identify anomalies in spending, which may detect or prevent fraud. Detect non-compliance issues, such as in terms of explained claims. See, compliance is nothing but the following the rules and regulations that has been stated within the national law framework. The use now the use of AI allows accounting professionals to allocate more of their time developing the strategy and problems. There is a see people are saying is that if you keep yourself updated, they'll say that AI. Some people say that because of artificial intelligence, jobs will go down. Some people will say that because of artificial intelligence, new jobs will be created. Okay, new job definitely. They see there is a progression, and the progression will be very extreme. Okay, it will be unimaginable. We are talking about chat GPT. Is that when you are talking about chat, we have never visualized that these things will be there. By the time, over a period of time, by 2030, the entire spectrum will have a different picture as well. Fine. This is we are talking in terms of what is the. Are you clear about this? What we have done,
Yes.
we are talking in terms of what is the things with respect to digital age. Very quickly, okay? Impact of ethical and unethical behavior. Definitely, if what are the consequences the firm will be imposed fines. You are losing the professional reputation. It is the being prevented from acting as a director or officer of a public limited company, and possibility of being expelled by the professional accounting. See, ACC have the basic rules, basic principles, code of ethics. Is it right? ACC has the basic code of ethics. If any of the ACCA person will break these rules, definitely they will take away the certification. They will get disqualification, and in some cases, in extreme cases, there will be a prison sentence. Is that? Or is that? If a common argued that these are the basic things. Is that? See, exam focus. See, question 2 in SBR exam always test ethics. Now you can understand the things. Is that? You can make it a sense. Question 2, this is normally what? See, I told you what? I told you 5 to 10 marks. Now you can understand how you can have a how you can score the mark. This way you have to plan. It's not difficult at all. If you follow, people say that why we are covering this lecture. Is that? See, now you will realize it. In addition to 2 professional marks will be allocated to application of ethical principles to the scenario, and for recommendation how ethical dilemma might be resolved. If you take very conservative approach also, we will, how many marks we will have? We will have minimum 5 marks. Plus 2 additional marks, that's very. Are you clear about this?
Yes.
Fine? No. Read this question. The directors of Cookie are very confident about the quality of products the company sells. Historically, the level of complaint received about the product quality has been low. Means they will hardly receive it. However, when calculating the warranty, the moment we say warranty and provision, which accounting standard?
37.
IES 37. We have to mention the accounting standards. Whenever the relevant accounting standard has to be mentioned in our question. See, these are the tips, these are the short These are the methods where we are scoring the marks very smartly. Okay, very smartly we will score the marks. Is that the moment we say provision, first relate the scenario, understand the scenario, and automatically apply the standard. They have overestimated the number of items that will be returned as faulty. Means when they have overestimated, what will happen? There is a over provision. Is it right? Is it? The directors believe that this is acceptable because it is important for financial statement to exhibit prudence. What I told you about
Yes.
prudence? Prudence is
Not
nothing
overspend.
but cautiously.
Yes.
We have to be very cautious. Fine, on one side, we are saying that yes, they have overestimated. But why they have overestimated? They have thought it very cautiously. Like this, you understand what? Like this, they will give one question for 5 to 10 marks.
Okay.
Okay.
Okay, sir.
Now, what we are saying, you have to be prudent. Okay, we have to be prudent. There is no doubt at that. But these prudence should be reasonable estimates. When we are talking about the reasonable estimates, what happens? We have to take into consideration. Say, I am writing this. You have to see, I am writing this. You have to write in sentences. Is it right? When you are talking about previous estimate, you have to take the actuals happens in the previous years. We will have the very simple way of scoring the marks. Is it right? You have a reasonable estimate. You will take the actuals what happened to previous estimates. Automatically, what will happen? That everything is working on what? Everything works on estimates only. And most importantly, the second thing is you have to be faithful. That's very simple, is it right? See, all we are using the accounting jargon as such. We have to be faithful. We have to say that yes, we are following IAS 37 provisions, contingent liabilities and contingent assets. Is it? We are providing contingent liabilities and contingent assets. When you are making a provision, we should not do any overestimation or we should not do any underestimation. Fine. Apart from that, you should have a concept of integrity. We have to be straightforward. Is it right? We have to be straightforward and you have to be honest. Yeah, we have to be honest. Is it right? We should not do anything which really is going to change the canvas of financial statements. Okay, we should not. We have to be very honest and is that next? Yeah, what happen? Assume. Is that if you have over provision? Is that if you have over provision current year? See the implications. Is that see the implication? What will happen? The profits will decrease. See, people will trap us. Okay, if there are any creative accounting methods, it is very easy to trap. Okay, if there is any current year, profits will decrease. Next year, what will happen? Next year, yeah, because of the right provisions, what will happen? Profits will increase. Then immediately people will question what is the reason why profits has been decreased. Straight away they will say that yes, profits has been decreased because there is a over provision. Then people will ask questioning us. So if something goes wrong, there is a very easy way of tracking the things. We can track the things where it went wrong. We'll track the things where it went right. So we should be very, very honestly we have to do, is that? And what we have told in the beginning, we have to keep aware about that to the directors. Is that directors, they don't know accounting, is that, but we have to make sure that the director should be aware about the international accounting relevant standards, relevant accounting standards, relevant reporting standards. This is the way the question will be asked. Okay, this is very simple way of scoring the marks. Very simplest way of scoring the marks. You should make sure that you have to create awareness among the directors that these are the reasons, because they are coming from a different field. You are as a professional accountant, you have the complete knowledge about this. Is that? Next, and most importantly, we have to prepare the financial statements with a true and fair view. How many points are they? You will see the things. 1, you are talking about 2, you are talking about 3, you are talking about 4, you are talking about 5, and you are talking about 6. Is it clear to you?
Yes.
Okay. Now you understand. See the thing. Every chapter is important. Is that? See, out of this, some we have a complete hold over it. Some we don't have hold. Somewhere we can really get the advantage of English and our common understanding. Is it? Now, next one. See the thing. Immediately you make it a point. See, now I will tell you. Still I have not started questions, solving the question. The rule in ACCA, most of what I read, first thing, you should not read the scenario. First, read what is the requirement. What is the question they are asking? That's very important. Once you know the question, then we can think from that perception what we have to present. What they say, they are talking in terms of what? Fair value measurement. See, they are linking two things. One, they are linking fair value with what? Fair value is discussed why finance directors fair value measurement is not in line with IFRS, and discuss the ethical issues. Which standard we have to follow?
The fair value.
For
13.
fair value?
IFRS 13.
Which one?
IFRS 13.
IFRS 30. Now, Tortoise has number of investment in listed shares. They are designated to measure at fair value measurement through comprehensive income. A new ACCA qualified accountant has started to work for Tortoise. She discovered that the finance director measures the fair value of these investments in the present value of fair value of these investments as the present value of the expected future receipts. Means what they are talking about? See, they are talking about investment in the listed shares. Yeah? Investment in the listed shares. And they are doing it through what? They are doing with the OCI, other comprehensive income. In the next chapter, we will talk about the format also. Okay? They are measured through OCI. A accountant came and discovered that the measures the fair value of this investment at the present value. These calculations give higher value figures than the quoted share price. Means if you are talking in terms of, they say that if they are using the value of this investment as the present value of expected future dividends. Means we are talking about what is going to have in the future dividends which you are going to receive. The finance director justified this fair value measurement to the account that the ground that Tortoise does not trade shares in the short term. And so quoted shares understate the fair value over the lab. Means it is not for the, they are not doing for a short term, they are doing for a long term. Is it right? Now, what we have done with respect to fair value in lecture 1? In lecture 1, we have 3 levels. Is it right? Level 1, level 2 and level 3. You remember that? Just immediately I will go to, I see level 1, level 2 and level 3. Is it right?
Yes.
Which level it is applicable?
It should be level 1, but they are using level 3.
It is unadjusted quoted shares or it is adjusted quoted shares? Listed shares. Is it listed? Investment in listed shares. Listed shares is nothing but in the quoted shares. It is not unlisted. Is it okay?
Yes.
Unadjusted quoted equity shares. Equity shares in the listing entity. One minute. Listing equity shares in the listed entity, unadjusted quoted price in the active market. Is it right? Is the now means which one we have to take? See, second one is the buildings held for use is it will not be applicable. Cash generated units it is not applicable. Means which one it is applicable? Level 1. Is it? This which one is the applicable? See that. This is level 1, IFRS 13. Okay, are you clear about this? Now you understand? This happens in every lecture. So the moment the moment we will have discussion, immediately I will give reference where we have done in the previous case. Okay, where we have done in the previous case. Now, what they say, tutors has a number of investment and they are designated, is it right? Now, the new find. The finance director justified this as a fair value measurement on the grounds. Now, this is point number 1. Give me point number 2 as per your observations.
They are using level 3.
Pardon?
They are using level 3.
On what basis?
Their future cash flows and present value of the expected future dividend receipts.
Where is that? 1 minute.
The finance director measures.
1 minute. Profit or cash flow forecasting using own data. Is it right? Yes. The profit, they are using the own data. Fine. Yeah. What they are doing? See, what they are asking us, keep it in mind, okay? What they are asking is, their requirement is only discuss. Is it right? The requirement is only discuss, nothing is there. We are not supposed to give any conclusion, okay? We are discussing that they are using what? They are using IFRS level 3. Anything else?
Uh, and this calculation gives a higher fair value. So this is not prudent.
Pardon?
The calculation gives a higher fair value.
When we are forecasting, okay, when we are forecasting, when we are making a forecasting, is that when we are making a forecasting, we are making a forecasting at a higher fair value. Is that they say that? Is that and they are talking about the somewhere it has been given where the fair value of this investment as the present value of the expected future dividend. Means again here what happening when they are doing it, that neither they are doing it honestly or not they are doing it faithfully. And because of that it will have impact. Is it right? It will have impact on all the stakeholders. Is it? Now, apart from that, what's happening? See the thing. When you are the finance director has justified this fair value measurement to the accountant on the grant. Now you have to link IFRS 13 with ethics.
Ethics.
Understand point? See what they are asking us. You have to be very very focused on the requirements. Is that we have to discuss the ethical issue. When we are talking about, we have to link IFRS means the accountant. Is that right? The accountant should explain. Is it right? Should make the director understand. Is that director understand the importance? Is that the importance and significance? Is the significance of IFRS 13. Is it? They have to. That is the role of an accountant as an ethical perspective. This is what we have discussed in the beginning of the lecture. In the beginning of the lecture, we said that ethics is one. We have to. If you don't know, I should explain you that yes, as a director, you have to do that things like this. Then only if you are not doing even after that, then that is not my responsibility. Is it right? If you are doing but as a responsible accountant, my job is to keep you aware of the things that has to be happen. Okay. Now you understand this. See, I will not teach. I am not teaching you. I am just giving you the way how to approach the question paper. That's very important. Is that? That's very important. Is that means we have to discuss IFRS 13. Then we have to discuss something. What are the ethical issues that will arise? Is it okay with you?
Yes.
Fine.